I'm often asked, why do we own gold in all three of our portfolios? Now, in the early part of my career, I wanted nothing to do with gold. I believed it was just a dumb rock. It doesn't pay you interest, doesn't pay you a dividend. Why would anyone own it? But the reason we own it is because it provides diversity. Now, diversity means having things that are going down when other things are going up, and more importantly, having things that are going up when other things are going down. Now let's think about this for a minute. If your portfolio drops 50%, you need it to go up 100% just to break even. But if you can mitigate that drop and your portfolio only drops 25%, you only need a 33% rise just to break even. Now let's think about returns since 1970. Here we have the returns of the S&P 500 in gold since 1970. The S&P was up 10.39% with a risk of 17.21, and gold was up 7.85% with a risk of 27.25. Now, since 1970, which of these two did you want? The answer is obvious. But I would ask you, do you want any gold in your portfolio since 1970? Now think about this. Gold has a lower return and a very high risk. This defies everything we've been taught about risk and return. We've been taught the more risk you take, the higher your returns. Clearly, that was not the case for gold since 1970. Yet you actually would have wanted this in your portfolio. Let's look at what happened to a portfolio made up of 50% S&P 500, 50% gold. This portfolio actually had a 10.42% return, higher than either of these two assets. And the risk was lower than either of these two assets. Again, this defies everything we've been taught about risk and return. This had a lower risk and a higher return than either of the two assets that make up the portfolio. This is the magic of diversity, and this is why we own gold.